I thought I was an investing genius. Until I lost most of my savings on stocks. I believed if I do my research, read the financial reports, follow the news, I can beat the market. And I did. I handpicked each stock, from technology to healthcare, from startups to blue chips. At first, I won. When one stock went up 40% in a few months, I was so confident that I thought, I've found the formula for getting rich. But then, the following year, the market turned around. The stock I studied the most dropped 70%. The company I believed in went bankrupt. My account evaporated by more than half in just 6 months. I didn't dare look at the investment app. I didn't dare tell anyone, and worst of all, I lost faith in myself. That's when I started to seriously ask myself, is there a way to invest that's safe, stable, and doesn't involve such daily torture? And I found the answer: ETFs. When you enter the world of investing, most of the advice you receive sounds very similar. Find stocks with potential. Stock A will double in 1 year. Warren Buffett picks stocks, why don't you? Sounds logical. The reality is cruel. According to statistics from Spiva, SP indexes versus active, over 15 years, 88% of active fund managers, highly paid professionals, have lost to the SP 500. What about individual investors like you, like me? Not 88%, but almost all. According to statistics from Spiva, SP indexes versus active, over 15 years, 88% of active fund managers, highly paid professionals, have lost to the SP 500. What about individual investors like you, like me? Not 88%, but almost all. I used to be confident because I read financial reports and followed industry news, but the truth is, I don't know what the company's management really is. I can't predict macro, interest rates, wars, crises. I don't know how the market will react to good news or bad news, and most importantly, I don't have enough time, mentality, and knowledge to make the right decisions consistently. When stocks go up, I feel like a genius. When they go down, I feel like a fool and sell, then regret. Then buy back. Then repeat the cycle. Instead of being a tool to help me secure my finances, investing has become a source of daily stress. Every morning when I wake up, I open the investment app. In between work hours, I check stock prices. Before going to bed, I read the news and worry. I can't control my money. Money controls my emotions. I lost money, yes, but I lost more than money. Lost valuable time chasing news, lost peace of mind in my life, lost confidence in my ability to manage my finances. Worse, I lost the opportunity to invest in things that actually worked, like index funds, ETFs, or sustainable businesses, because I was too busy chasing trends. I used to think, just pick the right code, I will win back. But stock picking is not a one-time game. It is a continuous game every day, every week, every month, and if you do not have a solid strategy, you will always lose in the long run. I realized a truth I should have understood sooner. I don't need to pick winning stocks, I just need to not pick wrong ones, and ETFs help me do that. That's when I started learning more about ETFs and gradually transitioned my entire portfolio to a simpler, less stressful, and more effective strategy. After the shock of losing nearly 60% of my account, I was in a state of disorientation. I did everything right, research, technical analysis, watching quarterly reports, and still failed. I started asking myself, is there a way to invest without playing the guessing game every day? I went to YouTube, looking for people who were sharing real experiences, not experts who were trying to get rich quick, and then I saw a video, Why Most People Should Just Buy Index Funds, by a guy named Jack Bogle, the founder of Vanguard. The first thing he said stopped me dead in my tracks: don't try to beat the market. Buy the entire market. It sounded so simple. Almost stupid, but because I was so stupid, I started to take it seriously. It's a basket of stocks, representing an entire market. Buying an ETF means you're investing in hundreds, even thousands of stocks at once. You don't have to pick individual stocks, you don't have to worry about bankruptcies, CEO scandals, or wild stock price swings. Example, VTI Vanguard Total Stock Market ETF. Invest in the entire US market, from Apple, Microsoft to small businesses. I thought, well, if I can't pick the right stocks, then just pick them all. I always feel scared when the market is red. I force myself to know everything that is happening, but when I invest in ETFs, I no longer have to check the app every hour. I don't care how much stock A or B goes up, I just need to know the US market is growing and I'm going with it. I decided to set aside 15% of my income each month, automatically transfer it to my investment account, buy ETFs regularly regardless of whether the market is green or red. No need for ideal timing, no need to stress about reading the news, just as regularly as brushing your teeth and washing your face every morning. At first, I kept a few favorite stocks in case of a big win. But after a few months, I realized ETFs give a sense of stability. Stock picking still makes me nervous. One day, I sold my last odd shares, and I breathed a sigh of relief, not because of the money, but because I was no longer obsessed with being right. ETFs aren't sexy, they don't double my wealth in 2 months. But they do help me sleep well, spend time with my family, focus on my work, and watch my account grow steadily. I don't invest to get rich quick anymore. I invest to get rich for good. Switching from stock picking to ETFs was more than a strategy, it was a release. I got rid of the pressure to always be right, I got rid of the price-checking addiction, and I started enjoying my financial journey. Since I decided to leave the stock game and move to ETFs, I have set myself a simple goal: build a low-risk, easy-to-manage portfolio that grows sustainably over time. No more chasing gains, no more guessing peaks and troughs, just the right strategy and persistence. This is the heart of the portfolio. VTI covers the entire US stock market, from large companies like Apple, Google, to small and medium-sized companies. Why I chose VTI: if the US economy grows, VTI will grow with it. Extremely low management costs, only 0.03%. I put 60% of my portfolio into VTI. I don't want all my eggs in the US basket. VXUS gives me global diversification, from Europe, Japan to emerging markets. This is 25% of my portfolio. This allows me to sleep soundly even if the Nasdaq is red, because my portfolio is not 100% dependent on the US. I use the strategy, DCA dollar cost averaging, time-based price averaging. Specifically, every month, I deduct 15% of my after-tax income, automatically transferred to an investment account. My broker is Fidelity, by VTI, VXUS, BND at the exact ratio set, 60/25/15. Don't care if the price is at the top or bottom that day, just buy. This helps me ignore emotions, avoid buying at the bottom and chasing the top, and take advantage of the long-term growth of the market. No frills, no gamification, low fees, easy to automate, too. Personal spreadsheet on Google Sheets. I have a simple file: O column A, date of purchase; O column B, amount; O column C, which ETF; O column D, notes. Market green/red, mood. Helps me look back on the journey, realize emotions do not determine results. Discipline is the key. Free, track net worth, investment growth, gives me an overview without having to check each stock. Before, I used to track 12 separate stocks, open 2 investment apps at the same time, use analysis bots, AI to scan the market, but then I realized, what works is not the most complicated thing, but the thing you can do most regularly. No ETF will 10x in 1 year, but they give me what I need most: steady returns, stable mentality, time for life, and that to me is true wealth. 3 years ago, Every morning I woke up not to drink coffee, but to open the stock app, Green Market. I was as happy as a child receiving lucky money, Red Market. I didn't want to get out of bed. Investing for me was nothing more than an emotional roller coaster, and that roller coaster didn't bring any better results. One day, my account increased by $800. I celebrated and went online to flex. The next day, it decreased by $1,000 and I felt like a failure again. I remember clearly that September when I believed in a tech stock that would go to the moon. I bought it when it was at its peak. 2 weeks later, it dropped by 35%. I didn't dare tell anyone. I just lay in my room, wondering, what the hell am I doing? I became a slave to the charts. Every hour, I checked the price. At lunchtime, I surfed Reddit, TikTok to see which stock to buy. I was no longer an investor. I was a reaction addict. I remember one time when I was having dinner with my girlfriend. I left it to run outside to check urgent news. The news turned out to be fake news. The relationship started to fall apart not because of money, but because I wasn't really present in life. Switching to VTI, VXUS, BND, I no longer expected a shocking increase, but I started to see accumulated profit every month, market down. I buy more, market up. I'm not in a hurry to sell. After only 2 years, my account increased from $11,000 to $18,000, and I only invested as planned, $500 per month, no trading, no timing. Profit comes from consistency, not judgment. No more opening apps 10 times a day, no more obsessing over hot stocks. I started doing things I used to neglect, going to the gym again, cooking at home, calling my parents every week, spending Sunday afternoons reading instead of watching YouTube about top 3 stocks to buy today. ETFs help me invest in the least mind-numbing way with the most long-term results. Before, when the market was red, I panicked. Now, I buy more. Because I understand, I don't invest for price, I invest for long-term value. Instead of thinking how to beat the market, I think how to stick with it for the long term. ETFs not only changed my portfolio, they changed my financial thinking. You might be thinking, ETFs sound good, but are they enough to make me really rich? I used to ask myself that question. I used to think I had to catch the 10x stock, time each bull market correctly, become a stock whisperer to be called an investor. But after all, I realized, wealth doesn't come from sprints. It comes from a marathon. No more sleepless nights over CNBC News. No more arguing with my girlfriend because I just checked this code quickly. No more feeling inferior when I see others making 40% profit in just 2 weeks. Now I invest without sacrificing my mental health. I'm getting rich, slowly but surely, and more importantly, I'm living a life that is not controlled by finances. 1. Don't try to outsmart the market. 95% of people think they can beat the market. But only 5% do, and you don't have to be that 5%, you just have to do the right thing and do it consistently, too. ETFs aren't sexy, but they work. ETFs won't make you rich overnight, but if you stick with it for 5, 10, 20 years, you'll look back and say, this was the smartest decision I ever made. 3. Financial success equals habit, not luck. I didn't win the lottery. I don't have an insider tip. I just do 3 things consistently. Save 20 to 30% of my income. Invest in ETFs every month. Don't touch them. If you're feeling overwhelmed by the world of investing, if you've ever lost money following stock tips online, if you're looking for a way to get rich without sacrificing your sanity, try ETFs. No skill required. No complexity required. Just get started. I am not a financial expert. I am a person who has invested wrongly and then picked it back up, and if anyone needs to hear this today, here it is. You don't have to be good, you just have to start, and ETFs are the best place to start. If you found this story helpful, like the video, comment, and share your investment journey. And subscribe to Money_VSQ channel because here, we don't talk fancy, We share simple but practical wealth strategies.